Hi, I'm Harry Rock, and welcome to another edition of the Westfield Council on Aging Presents. This is a special collaborative programming initiative with Tina Gorman, Executive Director of the Westfield Council on Aging, and Peter Coles, producer of WCPC Westfield Cable Channel 15. Today's topic is financial tips for COVID times, which is really important information for everyone. Our guest today is Susan Allen from Southwick. Susan has been a financial advisor for the past 25 years, and her focus has been on retirement planning, college financial planning, and really focusing on safe, guaranteed solutions so that you are hopefully guaranteed that you will not lose money, and she really looks at conservative investment solutions. So, Susan, welcome to the show. We are thrilled to have you and excited to learn from you everything that's involved with financial planning during troubled times, and we certainly are in troubled times. So you've been doing this for 25 years. Is this?
Yes, I've been doing it for 25 years. Started out as financial advisor in a bank, and I've also worked on the brokerage side, the insurance side. So I've kind of seen it from both sides.
Okay.
And learned a lot in the 25 years. And that's why I decided about 10 years ago to go out on my own and start Susan Allen Financial. And with, again, a focus, as you mentioned, of conservative, safe investments. And that really is something that's important for soon-to-be retirees and retirees.
Right.
You want to protect what you have.
Right. And I'm guessing that there's no age when you shouldn't be thinking about retirement and investment planning for the future.
Absolutely.
And
the sooner the better. The sooner the better.
Right out of college or?
Yes. It's never too early. I mean, there's so many charts out there. You can look them up on the computer where they'll show someone who started investing $100 at 25 as opposed to someone who started investing $500 at 45.
Okay.
And the person with the 100 at 25, because of the time value of money, comes out way ahead.
Right.
Even though they're investing so much less.
Right.
But just because they have the time, it makes such a big difference.
Right. I remember coming out of college myself, and of course, when you first get out of school, you have no money. And that's when you've got big expenses. You're paying off college loans, or maybe you're buying your first home and getting married, having a child. So you're doing a lot of different things that require a lot of money, but you're at the bottom of your pay structure. You haven't started moving up in your career path, so it really does become challenging. And I can remember thinking about retirement, and I'm thinking, that's a long way away. I just need all the money I can right now. But fortunately, I think by my late 20s, by the time I got married, we started that practice, and it's allowed my wife and I to certainly enjoy a nice retirement at this point. What exactly does guaranteed solutions mean? Safe guaranteed solutions, conservative investment. How can you ensure that you don't lose money?
Just by a word you said, by insurance. So there are solutions out there, I guess different products out there that will guarantee your money, that you don't lose your money. If the market goes up, you get some of the market, maybe 75% or a portion of it. But if the market goes down, nothing's taken away. So a real good fit for retirees because they can't risk losing anything that they have. Also, the insurance solutions will guarantee a lifetime income.
Right.
Or income for, if you want to take it for 10 years, 20 years, if you're laddering some things. So there's, some planning that needs to be done to find out the right solution for each person.
Right.
But that is out there. And I think everyone should have a portion of their money protected against loss. The market's great, but as we've seen in the past few months, it's very unpredictable and very volatile.
Yes.
So, sometimes to count your whole retirement on that, and if you're taking income from it, that means your income might be fluctuating. You have to worry every day. Oh, no, I have to run and look at the computer and see, is the market up today? Is it down today? Am I still going to get a paycheck? So just take that off the table and have a portion. Usually I like a larger portion that's just guaranteed. You don't have to worry. Your income's going to come in no matter what happens in the market.
Okay, that's really, really interesting. So let's kind of jump right into it. People are out of work.
Yes.
People are working from home.
Mm-hmm.
there are people who really are unsure about what their future employment status is going to be because businesses are struggling, and there's a chance
Absolutely.
that they're going to lose their job. I have a very close friend of mine that just lost her job,
Oh, it's awful.
and so she's been forced to look in a whole nother direction right now. And then people are waiting to see what's going on with the CARES Act. But I think it's always about, when you're in times like this, it's about budgeting and thinking about, okay, I've got X amount of money coming in, but how am I spending it? Let's talk a little bit about that, and
Yeah.
how should people be focused on their budgeting, and what kinds of considerations should they be taking with that?
Well, I think that it's always a good time to look at your budget, but that's one thing that gets neglected. And I've noticed business owners have a tendency to do that too, because you're working in your business.
Sure.
But it's never the wrong time to look at your budget. But with money being tight for a lot of people right now, it's really good to sit down and do the old basics of looking at what your necessities are, such as your rent, your mortgage, your utilities, cable, that type of thing. Look at everything you have to have on a monthly basis. Then kind of look at those wants, the other expenses that you have. You know, those subscriptions. I know I've done it myself. You have those subscriptions that are coming out every month, and you're like, what is that for?
Yeah.
That's been coming out for the past 6 months. Do I really need that?
Right.
You know, maybe that's a place to look to cut back, especially if you're looking for funds, you know, just to hold you over for a time that you're either working less, or if you're on unemployment, or, you know, what is going on with the current times now. I think that also you could look at, if you're contributing to, let's say, your child's education, even though it's very expensive, that might be an area to pull back in. Or if you're giving regularly to a charity, sorry, charities, they're still very important, but if you know that you don't know how long you're going to be out of work, or how long you're going to have less hours, or you're going to be on unemployment, and we really don't know where that's going as far as the unemployment. We're going to find that out this week with, you know, if they're going to extend that $600 additional, if people are going to be getting the stimulus check. They said it's almost guaranteed. So to me, that's not definitely guaranteed, but,
Right.
you know, if we're going to be getting another $1,200, that would be for singles, or $2,400 for a couple they would be
Okay.
getting. So that's going to be announced this week, and a lot of people are really struggling, and you know, that's going to help them out a lot. And one thing I wanted to mention too, sometimes people don't think about this. If you're on unemployment, that is taxable. So you may have a tax bill at the end of the year, because unless you arranged or set up, which they can do, for taxes to be taken out of your unemployment, you're obviously going to owe money on that money that you received.
So the CARES Act money, the 600 that everybody's always talking about, that's all taxable?
Unemployment is taxable,
Unemployment is
yes.
taxable.
Yes.
Wow. How long does that act, or that unemployment, run for? Do you have
Well,
any?
actually, right now is the week that they're deciding whether they're going to continue the 600, whether that is going to happen. I mean, there's a
Okay.
bill being proposed for that to continue, but there's also a bill being proposed that maybe 70% of your income you'll be getting. So we'll have to wait till the end of the week. Hopefully they'll decide by the end of the week, because then I guess there's a break and there won't be any decision at all. So a lot of people, that
Right.
600 will definitely be running out, not necessarily their unemployment, but the extra 600 will be running out.
Okay. You know, I'm just sitting here thinking about budgeting, and you know, there's the budget, and then there's the actual expenditures, and then the question is, how do they match up? Well, this is
Right.
what I planned to spend for the month, but this is really what I ended up spending. Do you have any tips for how people should chart what they're actually spending, and keeping
yeah.
track of
I
how
mean,
that
you-
matches up against their budget?
Absolutely. You can do the old-fashioned pen and paper, take the little notebook around you, but there's so many apps now on the phone where you can keep track of your expenses. I know that one that a lot of my
Oh, is
clients
that
have
right? Wow.
said that they used is called Mint. I haven't used it myself, but it's called mint.com.
Wow.
And
Check that
it's
out.
an app, and you can just put your budget in there and keep track of your expenses. So there's apps out there. You can do it the old-fashioned way, but just see where you're spending. I mean, I think during the initial stages of the COVID, a lot of people weren't spending much money because there was no place to go.
Yeah, that's
But
true.
you know, now that things are opening up,
Right.
You want to get back to checking on that budget and seeing where your expenses are going. There was a couple that they were getting ready to retire, so they really needed to look at their finances. They went back over everything and they found out that they spent $4,000 the year before on wine. So they're like, do we really need that much wine?
Oh my goodness.
So sometimes if you don't keep track of it, it's amazing
Right.
where the
How
money does
fast it
go.
adds up. Right.
Exactly.
Yeah, no, that's always the challenge of, like you said, you may have the budget, but what are you really doing, and keeping tabs of it. And the credit card versus cash is hard because credit card is just like free
It's
money.
so easy, right? And you forget that. Oh yeah, I did spend that when I was out the other day.
Right.
But cash, you notice when it's gone. And if you're struggling, with your payments, which a lot of people are struggling now because, again, they're out of work or they have less hours, and you should definitely get a hold of that as far as your lenders, see what they can work out for you. If you're behind on your mortgage payments, rent, that type of thing, don't ignore the problem. Go to the source, see what they can work on for you.
Mm-hmm.
Also, I know that in Massachusetts, the governor just extended the moratorium on evictions and foreclosures is the word I was looking for.
Okay,
Foreclosures
right.
till October 18th.
Okay.
So that may help some people to, in between that time, go to your lender and see, if they can do a forbearance, if they can add the payments to the end of your loan, what they can do for you.
Okay. Now, if people if their financial situations have really gotten dire and they need to make a loan to themselves, and they don't want to go to the bank,
Okay, yeah, that's what you're saying.
can they take loans from their own investments?
Yeah, one of the things that has changed with the CARES Act, or has been introduced, I should say, with the CARES Act, is that normally when you want to take a loan, a lot of people take it from their 401ks because they're paying back themselves. So the 401ks, in the past, you could take up to 50% or 50,000. So that has changed with the CARES Act. You now can take up to 100,000.
Wow.
And you have actually, time to pay that back. It's paying the taxes on any money. It's up to 3 years to pay taxes. So you also can just take up to 100,000 out of your 401k. That's also allowed now, not as a loan. Let's say you just need the money. Even if you're under 59 and a half, normally there would be a 10% penalty. That's been eliminated, and you have up to 3 years to pay the taxes. So anytime you would normally take money out of your 401k, the taxes would be due that year. But now you have up to 3 years to pay the taxes or to pay it back. If you pay it back, then you wouldn't owe the taxes. So two choices: either take money out of your 401k. Of course, you'd want to do that as a last resort because you want that as retirement. But if you need cash, or take the loan. I think I would look at the loan first. And then, if you don't think you're going to be able to pay it back because there's a lot of uncertainty there, you can take money out of your 401k.
So basically you're borrowing from your 401k and you're saying you have 3 years to pay it back.
3 years, yes, yeah.
What happens if you don't pay it back or you're unable
Then it'll
to pay it
become
back?
taxable, yes.
Oh, I see. Okay, so you don't penalize, but you're going to pay taxes on.
Right.
Whereas if you pay it back, you do not pay taxes on.
Correct.
I see. Okay.
And if you separate from service, though, if you do end up, leaving that employment or whatever happens, laid off, you do have to pay. The loan is due. Usually at most employers require that the loan is due. The CARES Act's letting it be extended, as we just spoke about.
Right. And I think what people really need to realize, and I just want to hit this one more time, is that this stimulus package has been coming from the government, this unemployment, $600, $1,200, $2,400, that's taxable. And I don't think that people think about that. I'm not sure if people are aware. They think that they're getting
Their
this free
unemployment
money.
is taxable, yeah.
Right, they're getting this free money from
Everything's taxable.
Everything's taxable.
I think
the
everything we
government's
do is
still going to get
taxable.
their piece. They may be giving it to you, but they're going to get it back from you at some point. So,
Right.
But be careful of what you're taking and how you're doing that. So, one of the things that people are conscious of is saving. They've got children, college. They're looking forward to, maybe they do still want to buy a home and stuff. How do they save, and what tips do you have for either investing or just saving or
Well, I think
preparing for that future?
with saving, I think you need to pay yourself first.
Okay.
So that's, if you don't do that, then everything else gets paid. So if you can, you're still able to save, that's wonderful. Put something, make it that automatic where it's done through your checking account, your savings account, and it just goes in. And of course, before you do any investing, I would always advise someone to use their 401k at work, especially if there's a match, because you are going to get that free money. So if the match is 3% or 4%, so before you even think about going out and investing in stocks, bonds, annuities, mutual funds, working with a broker, I think you should start with your 401k. That'll be automatically deducted for you, and a lot of companies, not all, but many companies give that match. So it's free money. So take advantage of that first.
Yeah, I'm curious about that. So on the 401ks, do most companies actually provide a match, or?
I think it has narrowed down, but many still do.
Okay.
I don't know after we come out of everything that we're going through right now,
Right.
things like that are going to change. But, the majority of companies, I'd say, do. About 70% do match something. And 2008, a lot of companies pulled back on how much. Sometimes it used to be up to 5-6%. Now we're seeing 2%, 3%, but they do match. They do give a match.
And that's based on how much you're putting in yourself?
Correct. Right.
Okay. So, okay, I see. Yeah, that's interesting. So planning for retirement, we kind of talked about that early on. What kinds of things, especially in troubled times like this, but you still need to be thinking about that path going forward.
Oh, absolutely.
So the first question is, how early are you allowed to retire? At what age can you
Well,
technically
I guess you could retire
anytime
if
but,
you have the money.
Right, right.
Think of, someone in sports or celebrity, they can retire
Okay.
when they want. But as far as tapping into your retirement accounts, I think
Right, right.
what you're asking, usually that's 59 and a half. But
Okay.
most people are waiting till their full retirement age. You can't really take Social Security until full retirement age. Or you could take it before, but you're going to get a penalty. You're not going to get the full amount. So a lot of people are trying to work close to their full retirement age, which is probably around 66 for most people if they're going to collect Social Security. But if
Okay.
you're thinking about retiring sooner, 62, you don't actually get Medicare until 65. So you need to kind of think about that gap. Where am I going to get health care
Okay.
between 62 and 65? So a lot of people are thinking about retirement at 65, 66, when they can start taking advantage of their Medicare, of their Social Security. And not to make it confusing, but yes, you could take Social Security as early as 62, but it will be a reduced amount. It won't be as much as you would get if you waited till full retirement age, and that's a permanent reduction.
So, I have a lot of friends, and of course I'm in that mid to upper 60 age range now. And so friends have always been talking about when, especially a few years ago, when I was starting to think about retirement, of when do you take your Social Security, and do you click it on now, very early, saying, well, this is just guaranteed income, it's giving me a raise because I don't know how long I'm going to live, or do you wait and assume that, well, I'm going to live a very healthy, long life? It's that guessing game, and do I wait till then, and then what's the difference if I collect now versus collect later? And
Well, that's definitely, there's a lot of controversy out about that. But first of all, I think you need to think about retirement. You may be in retirement 20 to 30 years. I mean, people are living longer. We all know folks that are in their 90s.
Right.
I think it was one of those shows in the morning, Good Morning America, used to say happy birthday to everyone who turned 100, but they had to stop it because so many people turned 100. It would be like the whole show saying happy birthday to everyone. So people are living longer, and the statistics, I believe, for a male is, and this is off the top of my head, but I'm going to be very close. For a male is, I might have it written down. Yeah. For age 65, they have a 63% chance of living to 85. Okay. And a 43% chance of living to 90. So
Wow.
those are pretty high chances. A woman, it's even higher. They have a 72% chance of living to 85. And a 53% chance of living to age 90. So that means you might be in retirement 20 to 30 years. So you really have to plan for that. But getting back to your Social Security question, it's usually better to wait. There's a break-even point. So a lot of people always say to me, well, why don't I just collect at 62 because I get those extra years instead of waiting till 66? But at, I believe it's 83, there's a break even where if you had waited till full retirement age because you're getting a higher amount, you actually overcome the person who took it at age 62. You end up with more money. There's lots of charts out there that show that. So if you can wait, it makes more sense to wait till full retirement age because Social Security increases about 8% every year for that you do wait. So you get a higher monthly payment. Plus, if you're getting a cost of living adjustment, it'll be based on that higher amount because you did wait. Not that it's that much, what everyone tells me, but you still are going to be getting more money by waiting.
Yeah, that's interesting.
But none of us can predict how long we're going to live.
That's the hard thing.
A lot of people think they're going to not be here as long as they are, but I guess if you took the higher amount and you're not, it really doesn't matter.
Right.
Right?
Right.
Yeah.
Yeah, that's interesting. Have you seen a trend out there? Do you have any sense of what people, or is it all over the place?
I think statistics say that the majority of people take it early,
yeah,
age 62.
they're figuring there's no guarantee in
Yeah,
life. Right.
but we're still trying to get people to wait till 66.
Right.
Just so they have more money when they're living longer.
Yeah, sure. Yeah, I've switched mine on, but I can't remember. I didn't do it at 62, I know that, but it was a few years after that. I can't remember exactly
Probably
how old
full
I was.
retirement age. And
Right.
one thing a lot of people don't know is that once you start at full retirement age Social Security, you can turn it off if you want to and let it accumulate so you get that 8% bump up. It increases that amount.
Oh, really?
Yeah, and then you can restart it at 70 if you want, just to have a larger amount. Let's say, I know people have gotten
Really?
called back to work. Yes, between 66 and 70, you can turn off your Social Security and say, well, I don't need this much. I think I'm going to let it grow.
Okay.
And it'll grow by that 8%. There's no point in waiting past age 70 because it doesn't grow after that. 70 is kind of the
Okay.
cutoff point. That's the
Okay.
highest amount you would get. And I think for 2020, the highest amount at age 66 that a can get is around $3,011.
Okay.
Yeah.
So a lot of people, they've retired and either they're bored or they find that they just don't have enough money coming in, so they look for a second,
Right.
part-time job, just enough to keep themselves busy, but not full-time. But there's a certain dollar amount that you can't earn more than before it
Well,
starts
that-
affecting your Social Security.
That
is
is
that
true
correct?
before full retirement age, but once you reach full retirement age, you can make as much money as you want.
Oh, is that right?
Yeah, that is true. So it's between 62 and your full retirement age. If it's 66, that you can only make a limited amount. So that's another reason to wait.
Oh, I didn't
Yeah.
realize that. Okay.
Instead of having to worry, did I go over the hours? Am I going to get
Right.
a penalty?
So people essentially, after age 66, are on Social Security. They could find another full-time job.
Right, they can make $200,000 a year, and it won't affect their Social Security in any way.
I did not
And
realize that.
Yeah, and also another thing with that is every year your Social Security is recalculated. So obviously that if they were making the $200,000 will be also recalculated in because they paid taxes on that. So that'll increase their Social Security also.
Okay. Do we actually receive an increase in Social Security every year, or
Well,
not?
it's not guaranteed. It's a cost
Okay.
of a living adjustment, so that's done
Okay.
in January if it's going to happen. But a lot of people tell me that when they get that, the $20 or $30, then Medicare goes up, so it kind of is like an even
Right.
wash.
Oh, yeah.
But yes, as far as Social Security, they look at goods and services, and if there's going to be a cost of living adjustment, I can't remember what it was last year. For some reason, it's escaping me, but I think it was 1.6%.
Right.
Yeah.
Yeah.
I mean, it's not a lot, but something's better than nothing.
Oh my gosh, yeah, absolutely. Well, you don't do much better than that in the bank when you put money in
I
the
know.
bank. So
I know, that's true.
it's
Interest
just
rates have been low for a long time.
yeah, they really, really have. But then on the other hand, if you're trying to borrow money, it's also been low. Ira Distributions.
Yes,
Let's
yes,
talk
that's
about that a little
changed.
bit.
Always you had to take out your required minimum distribution at age 70 and a half by the April after. It's a little confusing, the April after you turn 70 and a half, but that's changed this year. This was pre-COVID. This changed to age 72.
Okay.
And so you don't have to start taking required minimum distributions till you're age 72 or the April after you turn age 72.
Okay.
So that's changed. That's a big difference because some people didn't want to take them. They wanted to let their money continue to grow and accumulate. But during the COVID times with the CARES Act, now we are able to eliminate, or not eliminate, but you don't have to take your required minimum distribution for this year. So you don't have to take it. If you want to, of course, you're welcome to do that. But anyone who is required to take one doesn't have to do it this year because of the current situation.
Now, is there a difference between the Roth IRAs and the regular IRAs?
Yes, there is. On the Roth IRA, there's no required distributions. So you don't have to take money out of it. You take it out when you want, and it comes out tax-free.
Okay.
Yeah, so
Okay.
it went in. It was taxable money that went in, but it's a great opportunity to grow money and not have to pay taxes on it. And there's not many opportunities like that out there where you don't have to pay taxes, as we mentioned before.
Right, right. In your mind, how has it worked out, with the reworking of the tax code, whereas before you could itemize your deductions and receive tax benefits? Now you really can't because
Right,
it's
a lot
such
of
a
people-
high deductible.
I know.
And that's affected your contributions to charities, because before you could deduct, I think, your mortgages, and you could certainly deduct anything you gave to a 501c3 charity. So that was a
Right.
motivation to give to charities, and now you really can't
It's
deduct
pulled
anything.
back a lot,
It's been
yes.
pulled back. Have you noticed a difference with that?
I think I've really just noticed that people aren't happy with it. They've maybe seen some people have seen more in their paycheck. Some have told me they haven't. So we'll see how it all plays out. One place that I sometimes look at, I don't know if you've ever seen it before, is Debt Clock USA. Did you ever look at that? It shows all USA debt, like by the minute and increasing.
Oh.
It's a number we probably can't even pronounce, but it's in
Right.
the trillions.
Right.
And I guess why I'm mentioning that is we can see that in the future. A lot of times retirees say to me, and of course none of us know, but I'm going to be in a lower tax bracket when I retire. But I mean, at some point I think we're going to have to catch up with all that debt that we have, and taxes are going to be increasing. That would be my guess. I don't know. I
Right.
can't predict the future, but yeah, it's called debtclock.usa.
Oh,
It's
that's
pretty easy to
interesting.
find, and it'll show
Right.
everything that the USA owes and our big,
Right.
how much it is, and it's quite frightening,
Yeah.
actually.
Oh my gosh. Yeah, that is kind of scary, that's for sure. So let's talk a little bit about planning. What should people be thinking about for planning? Should they find a financial advisor like yourself? And if so, what should they be looking for in an advisor? And how do they start that process?
Well, I think everyone's different. Some people feel comfortable doing it on their own, doing the research. It's a lot of research, but
Okay.
if you're disciplined and you feel comfortable, that's always an option. You want to have someone that you feel comfortable with working with. I guess that would be the most important thing, that you feel you can call up, ask a question, you're not bothering them. Some of the firms out there, at least in the past when I worked there, you had to have a certain amount of money just to work with them. So, you want to be aware
Oh,
of
that's
that.
true, right.
Yes,
They didn't
yes.
wanna
Or you
touch
just
you.
get the 800 number.
Right,
And
right.
So you may want more personalized, someone you can stop in their office, or they
Right.
can come to your house. But it's it's whatever you feel comfortable with. That's what I say. And just make sure that you understand what you're paying for and what you're getting. Don't be afraid to ask questions. I noticed that. It's kind of like going to the doctor. Sometimes people feel really uncomfortable saying, like, how much does this cost? Or what's the downside of this? But don't be afraid to ask those questions. One thing that I usually use in some of my workshops, and I can do the riddle on you too and see if you get it. I have 3 people, Mary, John, and Joe, and they all start with $100,000 at age 35. Now, they all got 7% as time went on. Every year they got 7%, which is highly unusual, but that's what happened for them. Then at age 65, they got together. Remember, they all started with $100,000. So Mary had $324,340 at age 65. John had $432,194, and Joe had $574,349. And they're like, "What? We all started with the same amount and got the same return. So what's the reason? What's your guess?" No one usually knows. So
I don't know.
the reason is fees. The fees.
Oh.
Yes. So poor Mary, only ended up with 324. She paid 3% in fees
Okay.
on her investments. John paid 2, and Joe, who ended up with 574, only paid 1%.
Oh,
So
interesting.
yeah, lots of times people don't even know what they're paying for fees, but it can really determine how much you're going to end up with in retirement.
That is a great tip.
And
Right.
I am surprised every day I run into people and they say, I don't have any idea how much I'm paying. So I really think you should not be afraid to ask. And if you
Right.
are afraid to ask your advisor, most statements have an 800 number where you can go
Okay.
direct to the source. And you need to know, because if you're paying 3%, remember you're paying that 3% also when the market is going down
Right,
too.
right.
So you may end up paying 9% when everyone else is only down 6%. So those kind of things are very important.
Yeah.
And it makes a difference with how much money you end up with in retirement. So
Yeah.
you want to be aware of that too.
Okay, that's a great tip. You have any other little tips or gems of wisdom to share with us?
I'd say that's one of the most important ones, but I think everyone this is my personal opinion, is that everyone should have some safe money. You don't want to have all your money in the market. I know that the
Okay.
brokers will probably kill me, but I think you should have a portion, and the closer you get to retirement, you want to keep that money. It's not so much about accumulating money, it's about keeping it safe. And you have to think about, how is this money going to generate an income for me? Think of like a farmer that has a lot of land and it's very valuable, but how is that going to generate income for that person?
Right.
And you want to know that your investments can give you some guaranteed income, so you don't have to worry. You don't have to get up every day. Is the market up? Is the market down? Can I sell this? Can I sell that? So you want to, it's a whole lifestyle that you have to look at when you retire. I think also people get really hung up on the money part of it, but it's also some lifestyle decisions that you need to make when you retire. Are you going to downsize? A lot of people want to stay in their home, which is great, but are you going to want to, in your retirement, be doing the lawn work? Do you want to get up on the roof if something's broken?
Right.
All those kind of things are things you need to think about.
Right.
And also the whole long-term care situation. I think it's 70% of people 65 and older will need some type of long-term care,
Yeah.
which can really eat into your finances. So you want to think about that. How am I going to, handle that if that comes about?
Yeah, I know my wife is always thinking, she's much better than I am. I give her a lot of credit. She's always thinking of the future. I'm more of the present. And a number of years ago, she took out some long care insurance, and hopefully it will pay off from the standpoint it's a lower rate, and it'll provide us that protection when we're of that age. You mentioned earlier that you do workshops.
Yes. Yeah.
Where, when?
Okay, good question.
What are those involved?
I usually, now I don't know with the current situation how these
Right.
are going to be started for the fall, but usually starting in the fall through June, I do workshops monthly at the West Springfield Library,
Oh,
also at the Chicopee Library. So I
Okay.
think they're on Monday nights. West Springfield's usually Wednesday evenings. I also
Okay.
teach a class on Social Security, usually just once a semester at Holyoke Community.
oh wow.
And I have taught in the past. I don't know if they're going to be reviving it with everything going on at Berkshire Community College. And I've done a few things at the Senior Center in Westfield also.
Oh, okay. All right. So if people want to get more information, they should go to those websites and
And
look.
take a look. They always advertise them. I always put them up on my Susan Allen Financial Facebook page. Come and join me. So they're a lot of fun, and we, usually have 8 or 10 or more in attendance, and it gives people a chance to not feel that pressure that, there's sometimes the dinner seminars out there, and people
Right.
feel pressured that they have to buy something or set up an
Right.
appointment. They're very relaxed. They're associated with the library, so they're educational. Mainly.
Yeah, sure. So if people want to get more information from you, how can they get in touch with you, and what?
Well, they
how
can
do you
certainly call
advertise
me.
yourself? Okay.
And also, as I said, Susan Allen Financial is on Facebook. They can email me at susanallenfinancial@gmail.com. That's an easy one to remember. And I can get back in touch with them if they have a question.
And your
No
phone
problem.
number is?
Okay, it's 413-386-7071.
Okay, great. And you have a website as well?
Actually, I don't right now. I
Okay.
normally do, but we're kind of revamping it. And
Okay. So
I don't know
Facebook is
when
the
that's,
way to
yeah,
go.
I don't know if that'll be up for at least a month, but
Yeah, no, that's fine. But at least
they
you
can make
welcome people
contact.
calling and setting
Absolutely.
up
Yeah, I live in
appointments.
town. I go to, I do house appointments, whatever people feel comfortable with.
So they can come to you, you can go to them, you can just do it over the phone.
Correct.
Especially in these COVID times and
Yes.
stuff.
A
So.
lot of people feel more comfortable with that, and I can't blame them.
Yeah, great. Anything that comes to mind before we wrap up here?
Well, I guess my key points are, if you're planning for retirement, think those 20, 30 years. Don't think it's going to be 10 years, because a lot of people say to me, oh, I won't even be around, but guess what? You might be. You might be.
Well, we hope we are going to be.
Right.
Right. Right, absolutely.
And more than money, I think that you need to also think about how you want to live your life in retirement.
Yeah.
Every day is kind of a Saturday, so you can end up spending more money. So, think about what you want to do in your lifestyle and where you want to live. And
Right.
all those kind of considerations are very important too. And of course, health is number one. Take care of your health.
Yes, absolutely. And especially with everything that's going on right now. Well, our guest today has been Susan Allen. Susan, I want to thank you so
you're
much for
welcome.
coming in. This has really been interesting, and I'm guessing this is really the tip of the iceberg when you start looking at diving in. This show is really to kind of tickle people's fancy and get them interested in looking more deeply into these topics. And you certainly have opened up a lot of things here that I didn't realize. I've learned a lot just listening
great.
to you. So I am Harry Rock. I want to thank you for tuning in to another edition of Westfield Council on Aging Presents. Again, this is a collaborative programming initiative with Tina Gorman, Executive Director of the Westfield Council on Aging, and Pete Coles, producer of WCPC Westfield Cable Channel 15. Thanks again. We'll see you on the next show. Have a great day.